Supermicro computer, trading under the ticker. Supermicro computer is currently positioned at a critical technical juncture, with price structure, momentum indicators, and defined resistance levels outlining a framework that could lead to significant directional movement over the coming trading sessions. The current setup highlights specific price thresholds that, if breached, could unlock a move of substantial magnitude, potentially approaching a 45% expansion from key accumulation zones. On the hourly timeframe, SMCI is presently consolidating within a clearly defined range, bounded by support near $28 and resistance around $34. This range-bound behavior reflects a market environment characterized by indecision rather than directional conviction. The trend algorithm continues to generate frequent alternating buy and sell signals, a classic indication of whipsaw conditions. This lack of sustained trend continuity typically emerges during transitional phases in market structure, particularly during accumulation periods. This accumulation dynamic suggests a gradual shift in control. Sellers, who previously drove the decline from higher levels, appear to be reducing their influence over price action. At the same time, buyers are beginning to step in more consistently, absorbing available supply within this consolidation zone. This transition is not marked by aggressive upside expansion yet, but rather by stabilization and repeated defense of support levels. Momentum indicators further reinforce this interpretation. The Relative Strength Index, RSI, is now approaching oversold territory and beginning to form a base. This bottoming process indicates that downside momentum is weakening, reflecting a reduction in selling pressure following the prior decline from SMCI's highs. When RSI stabilizes after an extended decline, it often signals that profit-taking by sellers has largely been absorbed and that the market is transitioning into a reaccumulation phase. From a structural standpoint, this behavior aligns with the characteristics of a Stage 2 markup phase following accumulation. In this context, the initial resistance level to monitor sites at $37. A move from the current $30 area to $37 would represent approximately a 22% advance, a meaningful recovery move within the broader consolidation framework. However, this level also corresponds with a prior zone where sellers previously entered aggressively, meaning initial resistance and potential short-term rejection cannot be ruled out, even if price encounters temporary resistance at $37. The broader outlook remains focused on the potential for continuation, provided price successfully absorbs supply and eventually breaks above this resistance level. A confirmed breakout above $37, particularly if accompanied by strong bullish candle expansion, would open the path toward the next major resistance level at $47. This level represents a higher-order structural target within the current technical framework. Risk management remains central to navigating this environment. A structured approach involves placing stop levels below the most recent relevant higher low as price establishes upward progression. As price advances, stops can be adjusted upward incrementally, locking in gains while reducing downside exposure. This method allows participation in potential upside expansion while maintaining disciplined risk control. As price approaches overhead resistance, including anchored VWAP zones, stop levels can be tightened further to preserve capital and protect profits. When analyzing the broader trend on the 2-hour timeframe, the trend algorithm currently maintains a sell condition, which was triggered on November 7, 2025. However, trend transitions historically occur following accumulation phases. Previous comparable setups demonstrated that once accumulation completed and a buy signal was triggered, SMCI delivered a 31% advance within just 17 trading sessions. This historical precedent underscores the importance of monitoring the current accumulation structure for potential trend reversal confirmation. While the daily time frame still reflects a sell condition, the hourly time frame reveals a more nuanced shift in market behavior. The persistent whipsaw activity suggests that selling pressure is weakening, and buyers are beginning to assert greater influence over price structure. This divergence between higher and lower timeframes often occurs during transitional periods before a new directional trend emerges. Shorter-term analysis, including 5-minute price structure, provides additional tactical insight. Immediate trading conditions can be defined by the session's low and high boundaries. A confirmed break above the session high would indicate strength and present an opportunity to target upside levels, including prior highs near $31 and $31.23. Conversely, a breakdown below session support would expose the $30 level as a critical psychological support zone. This level carries structural importance, as psychological round numbers often serve as key liquidity and reaction zones. Despite the usefulness of shorter-term signals, the primary strategic focus remains on alignment with the hourly timeframe. The hourly structure provides a more reliable indication of accumulation and directional bias. As long as accumulation continues and buyers maintain structural support levels, the probability of upward expansion remains intact. Beyond technical structure, broader positioning dynamics further contribute to the significance of this setup. SMCI currently reflects elevated short interest, with a short interest ratio of approximately 17%. High short interest introduces the potential for accelerated upside movement if price begins to rise, as short sellers may be forced to cover positions, adding further buying pressure. At the same time, valuation comparisons relative to industry leaders such as nvidia highlight a perceived value gap, reinforcing the perception that SMCI remains in a contested valuation zone. This combination of technical accumulation, elevated short interest, and defined resistance levels creates an environment where volatility expansion is increasingly likely. SMCI is currently engaged in a critical accumulation phase, with price confined between $28 and $34 and key resistance levels defined at $37 and $47. Momentum indicators are stabilizing, selling pressure appears to be diminishing, and buyers are gradually reasserting control. A breakout above resistance could initiate a significant upward expansion, while support levels near $30 remain structurally important. The convergence of accumulation structure, momentum stabilization, defined resistance levels, and elevated short interest confirms that SMCI is positioned at a pivotal inflection point. The next directional move will likely be determined by whether buyers can successfully overcome overhead resistance and transition the stock from accumulation into a sustained markup phase.